What's up? Good afternoon, everybody. Welcome back to the Vant and Rant podcast, episode 595. It was a great day out there today for myself. Another very, in my opinion, predictable day as well. Called everything out to the T today. Very light on the headlines, but what's going on, Mike? How's it going today?
Yeah, it was a great day. I mean, a great day of trading to both sides. You know, the market gave you a good opportunity to short on the downside and gave you a good opportunity to buy the dip. And all you had to do was follow the leader. And it's not, again, I mean, if you can do this stuff in elementary school, then you can do this now. You can trade in this market right now. So if you're not making money in this market, well, I don't know what to tell you.
I know, it's just been...
You're not listening because
yeah.
it's just been straight on with exactly, you just follow your generals, follow your relationships, and it's been good.
Yeah, I concur. But there wasn't much out there as far as headlines. I mean, there were a couple of things involving energy and the UK, but... as far as I saw, I mean, you had a couple Fed speakers out there, but I don't know. Did you really see anything out there today?
Well, you did have the New York Fed survey come out.
That's right. I saw the survey.
And it kind of helped us a little bit because inflation expectations dropped. You did see, though, in September, a really big drop in household spending. Matter of fact, it was the largest drop on record in the survey. So, so you kind of had that. Then you had Mester as well. I mean, you had Mester yesterday. We had Brainard. These Fed speakers, you kind of almost like tune them out now, right? But the market, it's just like it constantly hits your news feed, and you can't tune them out, and that's the problem. But Mester, Mester pretty much came out and said, Fed's not lowering rates in 23 if you think that's going to happen. He also said he thought policy risk was to, the fact that, we may not raise rates enough. And so he was pretty much not a positive thing for the market. Not a positive thing for the market. But, really... I think the story of the day was really yesterday's action, right? And what you had was, again, following the leader with rates, even though the U.S. bond market, one of the largest markets in the world, was shut down, you still had trading, you had the international markets, and the 30-year gilt was the story of the day yesterday with, even though you had, and I don't know if you have the 30-year gilt tie, you can pull up the chart on that.
Yeah, I can pull it up.
So yesterday, you had basically rates climbing back up to where there was crisis levels yesterday. And of course, that required the Bank of England come out and do a couple other things as far as adding to their program. And then for the second time in 24 hours, they came out this morning again and added to the program, expanded it as far as, buying bond ETFs and such. So, basically calming down the market and definitely, kind of help some things out. And that's what I told our traders this morning. I said, look, be careful. Look for the reversal, okay? Because, we had rates, again, kind of climbing up, heading up this morning, sending the market down. But look for that reversal because the Bank of England, coming in and providing that extra protection definitely was setting us up for a nice intraday reversal, and exactly what we got.
Yep. Yeah. No, I agree. That's really what I was looking at in the morning as well. The first thing I looked at was where the rates, where the gilt, and where the dollar was, and kind of led the way for the day. But and then I'll go over the OPEC news when I go over oil and stuff. But if you want to pull up the charts and show us what you're looking at today, not really seeing any other headlines to cover.
No, SPY, nice little, if you look here on the weekly chart, we kind of talked about it, from a technical standpoint. The bull's kind of clinging to this weekly, 200 defense of the 200 moving average. We again pierced through it this morning, coming back up through it. So the bull's working hard at defending this area down here. So that's really, an area of defense for them. But again, another candle, another reversal intraday. I mean, we had a nice little piercing, technically on the SPY, made a new low, and we reversed right back out of here, and now we're back up to the June lows, kind of hanging here. So not bad from a technical standpoint.
Yeah, no, we're really putting up a fight here. I mean, and if you take a look at like the strength and the move, we're at equal lows here. It's producing some divergence here, and we could potentially get a decent bounce out of here if it provides us some decent support. So.
Yeah, I agree. I think we can get a decent bounce out of here. I want to see us hold above this level, obviously. And it's 36.40 on the ES. So we want to see that hold. And then I think we could definitely push up into the upper range. But don't forget, I mean, look, we're in an active sequence to the downside. We have been since September when we kind of reversed this little pivot up. And if you look, you can see the 21 moving average right here has been a nice little lid. So it's definitely kind of coinciding with this trend line. Kind of gives you an idea if we do get a bounce where we can get it. But I don't expect too much. I mean, look, we do have CPI coming up on Thursday, guys, pre-market. And that's going to be, that's going to dictate where we go really over the next couple weeks. So that's a big number. We have PPI tomorrow morning. That'll be a good number. And then, of course, retail sales on Friday. If you look at the 4-hour chart, Ty, we still are oversold level 1 on the oscillator. But what do you see in here as far as this is concerned?
Yeah, we're kicking a nice bullish engulfing on the 4-hour here, and you don't have it up, but it's fine. You don't need it up. Is the RSI? We're producing a nice divergence here as well on the RSI, and so it's kind of seeming like as long as we close back above this 360, really where it's at. This is producing a nice double bottom bullish engulfing divergence play to where we can get at least another squeeze back up towards this rejection zone in here, and maybe produce another lower high or something. But it seems like we could get a little bit more of a bounce out of here.
Yeah. We do need to get back above that level, though, really to kind of make that possible. We're kind of fighting it right in here, fighting it. Got a rates, got the dollar kind of bouncing around, not doing much. And you got the VIX remaining elevated, which we'll get into in a minute. But we still got this island reversal sitting here. So not expecting too much action to the upside if we do get it. We did get rejected out of this zone. There's about 5 or 6 closes all within this area. A lot of liquidity sitting in there. It's not a coincidence. We came up here, rejected, back up here again, and rejected right out of this zone. We are below the 5 EMA on the daily chart, which is bearish, and you have that pointing down, so it's something to keep an eye out. But nice reversal here. Nice V. They say V for victory, right, Ty?
Yeah.
So V for victory, went right up into this low up in here, rejected this area to the T. Here's the June lows rejecting this area. So right now you have 2 areas of rejection, which you would expect. I mean, you wouldn't expect to just slice through these areas right on the first go. So it doesn't mean the bulls are completely done today, but definitely got some more work to do.
Yep, agreed.
If you look at tech still, printing a new. We printed a new low, 52-week low yesterday. Printed another new low, but nice little bounce. I mean, if you look in here, we're about 4 or 5 points off of the lows on the Qs. But definitely weaker. They need to get themselves back up above this area. But again, if you look at RSI, Ty, seeing a little bit of a divergence in here.
Oh yeah, you've seen a pretty big divergence. I mean, and kind of the same across the board. As long as we can get above this previous zone in here that you have drawn, this RSI divergence I think could play a long way as far as we can get a nice rally. So that'll be something to watch.
Well, that'd be nice. I'd like to see us possibly get a rally going into CPI. Would be a nice little deal, but we'll see if we can make that work. IWM. Interestingly enough, IWM coming back down below here, but again, surging out. We talked about small caps really leading the way, staying stronger in here. So small caps never pierced June lows, and they haven't even pierced the September lows. So small caps diverging a little bit. Definitely something of note, and definitely something of note if you're a bull to kind of maybe hang your hats on, so you can kind of see this divergence so far. If you look at the ES, and we talked about these levels, and Simon is in the chat. How's it going, Simon? It was a pretty decent trader today. So I tell you what, though, what was really great about the ES was the trading that happened pre-market in here, and we had some nice trading in here. This bounce going into the market open. Look how we bounced off of VWAP. We kind of rode the 22 up. Nice action in here going into the 9 o'clock hour. And then, of course, they rode it back down. You had a nice rejection of VWAP in here once the market opened, which sent us down. And then we had another rejection off this level. So you had some good trades in here. Had some good trades. And really, again, we talked about this 3,600 level, which is right here. So, we had broke that pre-market, so you can see the pre-market lows. So what made this such a good trade this morning was, and I went over this with the group this morning, I said, look at the pre-market lows because they're typically important. We had a nice bounce off here, which means we never got down to what I consider mission critical, which was this 57.1 level. So we never got down to that level, which is good. And they bounced this right out of here, even came back in for a retest. And it's been nothing but higher lows all the way up, Ty. So nice trade. If it gave you a bunch of good trade opportunities to the upside after giving you great trade opportunities to the downside.
Yeah.
So, yeah, looking pretty decent in there. Looking pretty decent. Now, we are kind of breaking this, kind of hanging, going sideways. But look at the time. I mean, look, 1, 2 o'clock, lunch hour. Let's wait till we get maybe closer to the power hour to really see, where. But the fact that it's holding this 3640, I think is very bullish. I really do. I think this is bullish. This is the June lows that we have for the ES. So if we can kind of hold in here and kind of bounce off, hold these levels, even if we're going sideways, definitely bullish going forward. VIX, we talked about the VIX. VIX being stubborn. We talked about, yesterday where every time we've been in this zone, okay, the VIX is kind of, dropped off and signaled a really good rally out of here. So you can see we popped up, had a rally. Now we're back up. Second day in a row, we're up in here. And you can see, off the June, off those June lows that we had, this drop from VIX out of this area gave us a nice little rally in the markets, got a nice little rally. So this is the area we're looking for. Another thing, another little bit note of divergence, if you really will, you can kind of see right in here. I mean, again, VIX making a higher high. And even though we broke the lows, we're still kind of down here, not really matching where volatility was last time.
Yeah.
So another bullish divergence in there if you're watching the market. So let's see if we can get a little rally. I'd like to see the VIX kind of fall off. It's the three horsemen that you're following. Okay. And, it's the VIX. The other horseman that you're following is the dollar, which I know you're going to talk about. Okay. And, you can see dollar making a new high on this rally up, but falling off. which is enabling us to kind of fall off a little bit. And then, of course, you got rates in the 10-year very close to 4%, Ty.
Yep.
Very close. I thought for sure they were gonna push it, but kind of falling off here. You can see, bond market closed yesterday, but we did file the TLT and other events, and technically 10-year did break 4% yesterday and in the after hours. So that's why you had a nice little low in the ES futures. But kind of coming closest 4%, rejecting, now pulling back, but still heavily elevated. So to me, guys, what you need to watch is what's going on over in Europe. And Bank of England's kind of pushed themselves into a corner. And I kind of like to get your take on this. So the Bank of England, their emergency bond response supposed to end. It is supposed to end the
Friday.
end of this week. Yeah, it's supposed to end this week. I don't know how it can because then they're going back to QT. They said yesterday that they are going to continue to raise rates. Well, you're kind of fighting two masters at this point. And the head of the pension group over there in the UK basically come out and say, look, we need another 30 days extension. So it's going to be interesting. If you do see Bank of England capitulate and extend it past Friday, you could definitely see a nice little rally out of that because I think you'll definitely see rates fall pretty good. You'll see a rally into bonds. And if we have rates drop off pretty good, that's going to have a intended effect on the market, stock market prices, and we can get a rally pretty good off that. So we got a couple things setting up. You got the BOV waiting to get going, right? You got that waiting to see if we can get a rally out of that. You got CPI coming up, and then any capitulation, Fed capitulation, obviously would be a good thing looking there. So welcome in, Mo. Nice to see you. Mo said he canceled his house payment. I was going to say, well, you got to make your payment, bud.
He canceled the bid on his new construction house he was about to buy.
Yeah, but you know what, Mo? I was having this conversation about housing with somebody else yesterday afternoon, actually. And so what do? All right, there's a conundrum. If you buy with elevated prices where they are now, and housing prices have started, Case-Shiller came out today, and we saw a drop in housing prices. Not dramatic, but the question is, do you buy now with, say rates are 6%, right? But housing prices could fall another 20%, but rates could go up to 9%. So what do you do in that equilibrium, right? And my point is that, look, I'm not buying if housing prices are looking to fall 20%. And my reasoning is, Ty, rates will eventually come back down, and you can always refinance your property. So right. I would rather pay a higher rate and have a lower house price because whatever you purchase, that's a fixed cost as far as that's concerned. So that's the way I'm looking at it. So I think you made a pretty good decision there. As far as I'm concerned, I'm not buying housing. We've been looking to actually purchase housing for a year now, and we've been very vocal on this show that we pretty much have stayed out of that, right, Ty?
Right.
I mean, we're not getting all ramped up into that. So I don't know, Mo. I think you made a good call. I think you made a good call. So I mean, you can always refinance. So let's let those housing prices come down.
Yeah.
Or, and you could do what Borderline suggests, and this is what we suggested last year. You just live in a freaking cardboard box. Right?
Yeah, you can get, I mean, why not?
Cost of cardboard's going up. Inflation.
Won't be able to afford a cardboard box.
Get a little pullback here, especially in the Dow. Dow's negative, by the way. I mean, excuse me, the NASDAQ. NASDAQ's negative, so views are negative. Be careful here. Starting, dollar's starting to inch a little bit, but I think we've come pretty far, pretty fast today. What do we all think of the IWM? Well, I'll get into that more, Mo, after Tyler. But IWM, we said it, is already holding up better than the rest of the indices. We'll start seeing some of those divergences. So temporarily looking for a little bit of a bounce to maybe hold. But Tyler,
Yep.
a lot of what you tell me is going to dictate it, though. I heard you had another good trade.
Yeah. It was another. Of course, it was with gold.
Is gold your bitch at this point?
Gold is my absolute bitch. I had a rough patch with gold. Maybe like a week or two back, but I tell you, I came on top, and gold is now my bitch. So I had another really good call today. I mean, price. I mean, really, like you said earlier, price is getting so predictable and easy to trade lately. Like, if you're not making money in the market, you're really not paying attention. And I talked about it on my show this morning, basically explaining the talking about the gilt situation as well, and looking at the gilt here, the 30-year. This drop here is when they came out and announced their intervention, and now we're marching back up and almost fill this entire move here, and it's kind of the same situation as the yen intervention is. You get that initial reaction, and then it ends up completely replacing that move. And so if you look at what you could have I guess anticipated is with the news are coming out as far as, well, they're going to continue the rate hikes, and this is supposed to expire Friday, then you can expect that this is going to continue higher and I guess reach obscene levels that's going to really cripple their economy. And so, I know they're trying to push for longer, and I really don't see how they don't push for longer. And I don't know, it's just tough. You either continue your rate hikes to fight inflation, or you just crash your economy off of the gilt here. So
yeah, I mean that's a great point, Ty, and that's what I'm saying. I mean, Bank of England basically have painted themselves into a corner.
Yeah.
And it's like the heroin addict. It's so basically what happened. You had the heroin guy, basically was going through tremendous amounts of withdrawal. So what do? They gave him more heroin, and so now they're addicted to it. And it's just like, I mean, look what's going on. I think Mal posted it in the Discord, but look what's going on with the yen. I mean, basically not trading for free. It's just not trading, because what happens is you break the market, and market pricing mechanisms be damned. And so right now they're really painted into a corner with the way inflation's going, with where the economy is, and with the crisis that they got. Because it's obvious now, looking back, that they were on a Lehman style. I hate to say that because everybody's saying it now, but they were at a true Lehman style moment of having a complete breakdown of a lot of pension funds basically come crashing down. So they're going to have to defend that no matter what they do.
Yeah, no, exactly. So it's definitely going to cause a ripple effect in our economy, whatever they decide to do. And so just keep an eye on that, because I was watching the dollar this morning, and this morning it was falling off, and it looked like it was momentarily having a top in here. And so looking at it this morning, it was almost creating this not really head and shoulders, but it was like a rainbow formation here, where you have the high, you have this previous high, and then we had created this previous this lower high. And we
almost looks like a head and shoulders pattern to me.
I was going to say head and shoulders, but I was like, well, it's somewhat of one. But
yeah, it depends. It's yet to develop.
Yeah, so it's
we'll have to ask Bornelam, our expert. We'll have to let him. Bornelam's our expert head and shoulders guru. I'm sure he'll chime in on that.
It's like an extended left shoulder, but it's like one guy with a long left shoulder. It's fine, but it's just
like the hunchback.
The hunchback, exactly.
Yeah,
but
the hunchback shoulder.
Look, whether it's a long shoulder or not, it still has the same pattern here, and so it looked like we were going to have a little bit of a drop today through 113. Regardless what you call it, Bornelam, it's the same idea as far as we're creating a lower high and we seem to be rolling over here. And so 113, I said if we drop 113, we're going to have a pretty decent drop, most likely a recess down to 112. And that kind of fueled my trade ideas today. And by the way, we were down almost exactly to where I thought we were going to head to. We broke down through 113, had a little bit more of a deeper retest than I thought we would. But regardless, had that retest and then continued down to 112,400. So that was kind of the idea this morning. As far as looking at that, I was looking at rates. The rates were rolling over as well. They were coming down to retest where we had opened up back on the day we were off here. So we came down, found support there, and we're leaking off a little bit. So I expected a rally in gold today. I expected a rally in equities today. Like you like to talk about, follow the leaders, and the dollar and the rates look like they were going to have a pull off today. And so looking at overall price here, dollar found some support at this previous point of intersection on this descending trend line here that we just broke and retested recently. And so really 113, 112.30 going to be the area that the Dixie has to hold if it's going to maintain its bullish sequence here to push back towards highs. If the Dixie gives up 112.32, then I think we have an extended pullback back down towards like 110, and we maybe create some type of bigger double bottom here at 110 where we have this low, we have another low at 110, and then we have an extended push up. So it could have another pullback, but again, really going to want to watch 112.32 to see what your expectations can be for the Dixie moving forward here. Gold, again, gold looking for a rally out of here. Kind of the same trade idea where I made the 25,000 from. It's just it wasn't as developed as the other previous trade. Is you had this yesterday. You had that nice, pretty deep down day. It was around 32 points. And it really off of no Dixie volume, right? The Dixie was closed. And so looking at it today, we had the low of yesterday form at 1666. Then we had the low broken overnight in the after hours, came down to retest 1660, which is one of the major point of controls for gold in here. Retested that level, and then we were creating some type of divergence here as we were sitting at 12 oversold. Creating these increased lows as we were basing here at 1660. And so I caught a nice early entry on lower time frames around 650. It was actually an early entry here, but it kind of seemed like it was ready to go. Caught an entry here long, looked for a move back up towards these highs. I caught this top here, and that was it. So I'm caught around 80 pips. It was around a 9 pip winner. Or 9-point winner here on gold this morning. My overall analysis was an 1685 move, which we got very close to. So it could have been I guess a more of an extended day here, but it just wasn't ready to go until later in the day around London close. So, but ended up working out really well. Regardless, we're now sitting in this daily consolidation zone that we sat in back in mid-September. And so now 1685 and 1660 are going to be your consolidated levels as far as, where the next point of control is going to be for gold. Do we head up and retest 1700s if we break 1685? Or do we chop around here for a while and then break 1660 and head back down towards 1600? So right now, until I see a clean break throughout this consolidation zone in here, it's obvious an area that we've had a lot of rejection, a lot of consolidation, and so definitely just going to be watching this zone here and playing the zone until we get a clean break. Oil was a little bit more tricky today. I was talking about the as far as oil.
Simon had a hard time in oil.
Yeah,
I would look at that chart. I would have a hard time in oil.
And I could see how you had a tough time in oil today. I didn't trade it for a couple of reasons. If you've noticed, the oil's been kind of rallying. So look at the dollar the last few days here. Dollar's been rallying the last few days. And if you look at oil, oil's been rallying as well the last few days. And so you saw that divergence there. And I brought that up yesterday. As I said, they're diverging, they're both going up at the same time. So one of them's got to break it. And when I saw both of them, when I saw the dollar top, potentially rolling over today. I was looking at oil. I was like, oil's rolling over a little bit as well. So I was like, I don't really like the shorts because I don't think that it should be going short with the dollar being short. But I figured maybe oil's rolling over today just to, I guess, clear some of the way from the last couple of days of price action that was really invalidated. And so we started rolling over. And this morning, I mentioned there's only one play I would play here in oil. And is if we had a retest of 90-40 area, I'll look for shorts for a pushback down to the lows. And so that was the only play that in my eyes made sense today. And if you had looked at price action, it actually played out perfectly. You had a nice rebound to this 90-40 area. Could have taken a short there, back down to lows. It would have called it a day, that's it. After that, chopped around pretty heavily. It's really I'm not surprised about the price action today because it's the dollar's still dropping and oil's consolidating, so it's trying to figure out now what it wants to do, and it's kind of getting pulled in both directions. You had OPEC, you have a bunch of oil news coming out where now the U.S. is trying to figure out how to retaliate against OPEC, and they said, well, we can just retaliate by releasing more SPR for as long as we want. Well, all right, first of all, that's not going to.
You don't have much left.
Yeah, so
right.
There's what, like 20, there's 22, like, I don't know, there's not a lot, 22 days?
22 days, yeah.
22 days left, so, that's not, congrats, that won't really, we're going to be then drained to zero. You don't have enough to drain that will combat, what was it, like 2 million barrels per day, or something like that. You don't have enough to combat that, and so now they're coming out and saying, well, here, how about this? How about we buy oil at 75, take some off the market to put it back in SPR, and that'll take away some of the supply, and that'll help you prop up the oil market. So now they're trying to make deals over with OPEC, saying, look, let's just get a cheaper price, and we'll take some supply off the market for you. And so now they're trying to go at it that way because they realized they were dumb as shit by mentioning that they could drain more SPR. So now oil's getting pulled in different directions, doesn't really know what it wants to do. And so I don't think we'll have much directional movement in oil as far as breaking 95 or breaking 86 until we really figure out what the hell's going on in this market.
Right.
So, I mean...
Good luck with that.
I don't even...
Well, Ty, I really feel that this administration, and again, not getting political because, we don't get political, but, I really have a hard time thinking that this administration is either inept or they are intentionally trying to cause crises everywhere. I mean, they've completely mismanaged the oil trade, okay? They have, when we get into Uber and Lyft, the Department of Labor is trying to change characterization of, employee versus independent contractors. They're effing at the worst possible time. They're effing the freaking semiconductor industry.
Yeah.
I mean, where you can't sell anything to China. And, I get, look, I'm all on board with maybe what you're trying to do, but maybe now might not be the best time to implement some of this stuff.
Yeah.
So it's just like a rudderless ship. And so what we have is a situation where, whatever you want to call it, political policy of what's going on with the current administration just causing issue after issue after issue. Yeah. So,
I agree. And it's just like, the problem is people don't really understand. I saw this funny quote, and I know you know who Andy Frisella is, and I don't know if any of you guys know Andy Frisella, but he put on a story today. Some people would know tyranny if it covered their faces, locked them in their homes, enacted the biggest wealth transfer in history, censored them, made them show papers, and forced medicated them. And now it's election time, and they're going to throw 10 G's in student loan relief, and just there's a bunch of So it's just
This is like one big smoke screen. I agree, Born Alarm.
right.
It's just like one big smoke screen, and then of course, and I'm so tired of the Ukrainian war, I can't even see straight.
I know.
There's people dying over there. Either get off the fucking, either let Russia do what it needs to do to get its territory so it'll stop, or go in and defend Ukraine and push them out yourself. But this meddling in the middle is only hurting ourselves and prolonging the war. So again, I didn't mean to get political, but I'm so tired of seeing this war go on and the ramifications from it. And again, poor effing timing.
Yeah. So yeah, no, I don't know what to say at this point. So, but that's it for me. I mean, it's really everything I was looking at. I mean, look, I didn't cover Bitcoin, but really there's nothing to cover there. It's still in this range. So
look, I think Bitcoin's laying on the bench over here. It hasn't moved.
It's literally flat for the day.
It doesn't.
It's the thing is the market's somewhat trying to rally out of here, getting a little bit of a lift off, and Bitcoin's completely flat, hasn't moved. So that kind of shows you that, let me pull it up real quick. I told you guys about this move here with Bitcoin. Is last time we had the market rally, right in here, there was, October 3rd, October 4th, somewhat they tried to rally. And
right.
Bitcoin wasn't moving at all. It wasn't breaking out anywhere, and so I mentioned there's really probably not a sustained rally. And again, market if you look at the ES, it's green, trying to hold up, trying to potentially find support, and Bitcoin hasn't moved a fucking inch. Whoops, and it's just completely flat for the day, and is nowhere near levels of. So
you can't trade Bitcoin.
I bring that up because I know that Mal likes to kind of put that two and two together and talk about
turn you to a real safety trade. Yeah, Bitcoin's cash, man. It just sits there.
Yeah.
What the F?
Exactly. So I thought that was interesting that maybe this just is what Mal was inferring as far as this is just a short covering before fundamental headlines, and then we continue back down. So we'll see, but interesting.
Yeah. Well, look, Look, it was a great day of trading, and I'm kind of talking to the group. I mean, it was a great day of trading. Don't try to be a hero and try to trade the rest of this day, because this is just a choppy mess at this point. Look, it was great. I mean, we had great short all the way down trades. We had great long all the way up trades. We got exactly what we were looking if we were following the leader. And now, you did have a nice little bounce off of Friday's low. That's what this is. This is Friday's low, important area of inflection. We're back above 3640, but I mean, I'm looking at it. I don't think anybody's awake in the bond market. I mean, that thing's just sitting there. The dollar, same thing. So I think right now it's the calm before the storm. And yesterday's action, by the way, we did have a good trade idea, which did not work out.
Yeah.
Yesterday at the end of the show.
Damn.
But that's okay. I mean, it was a short stop loss, so I just added to my losses for yesterday. I don't know. I mean, look, I find it just like I find it hard to have a reason for this market to go up. I'm also starting to find it hard to find a reason for this market to go down. And, the Bank of America Fund Manager Survey came out again, and basically institutions and hedge funds are the largest underweight of global equities that they've ever seen in that survey since they've been doing it since 2013, I believe it is. I might have that mixed up. But so, really, there's nobody left in this market to sell. Okay. I mean, there's really is no more weak hands. I mean, if you haven't sold by now, I don't know what to tell you. But as far as this market's concerned, to me, I think we're gonna need a catalyst. And yesterday's trade action into the afternoon was definitely tough for me, and it was just choppy. So don't chop yourself up into the afternoon, especially after we had two great trades. To the upside, downside, just really good. So let's just enjoy the rest of the afternoon. But anyhow, let's get into those trades. And, it was fun to the short downside. I mean, again, I talked about the labor market, the Department of Labor coming out, uh, possibly changing, or I guess they did change the characterization of what it requires to be an employee versus independent contractor. And if you remember, and you've been following this for a couple of years, we traded Uber and Lyft when the state of California was going through that process. Matter of fact, I lost a lot of money in that trade because there was false information that came out, and then they reversed it, and that was just a shit show of a trade. But if you look at Uber, I mean, a hell of a hammer bar kind of sitting in here. And what I like about this Uber trade is that you had nice test down into liquidity. You had a nice short down in here, almost leaving us an island here above. So definitely some bearish action. You can see the volume that kind of poured in this thing. But this was a great short right off the bat in here, and this just was a great trade. And again, we put this one out in YouTube, in Discord, and we jumped in on this candle as it started accelerating, got in here, and then we took some off down. I think it was around 23-25, something like that. So it was a nice 2.5 point trade short on an Uber trade that just worked really well. So and then you had the nice little buyout. I mean, you're going to see these V-shaped charts all over the place. Nice buyout. We didn't take the upside trade, but you can see what happened with Uber. That's the one that we traded. Lyft, we didn't trade Lyft. We traded Uber. But Lyft, same type of action here, as you can see. If you look at the daily chart, Lyft. The reason we didn't choose Lyft was because Uber, if you look at the daily chart on Uber, the daily chart had a lot more bulls sitting in it, and we figured it'd be a lot more people ready to capitulate and get out of this thing. And it worked out really well. Another short that I'm glad finally worked because the theme that it didn't work the other day when you're trading this. I mean, look at these semiconductors. Be careful in here, guys. This industry may get some bounces and some pops, but it's being sold. And look at KLA came out and said this morning that they're starting Wednesday. They're cutting all shipments over to China. I wasn't KLA. What was that? I'll pull up that in a minute. But I mean, look at Taiwan Semiconductor. Same thing. I mean, the semis just look dread awful. They're all at lows for a reason. And it all stems from the current administration's basically mandate that they not be selling the nano equipment and the high speed chipsets over to anybody related to China or China, domestic firms. So, I definitely would be careful of that. I mean, look at Taiwan Semiconductor. It's got like the horn pattern going on, and it's definitely weak. You did get a little bounce today out of NVIDIA off of the lows, just like AMD. But I mean, it's look at these charts. They're broken. And I saw them out. Yeah, you're right. MU did get a nice little bounce in here. It seems like MU's kind of holding up a little bit better. Still a disaster chart to me, if you ask me. But yeah, it got a little bit of a bounce in here, and you can kind of see it's kind of riding a trend line in here, but still, and really kind of holding this area where if you look at NVIDIA and AMD, they've since broken their yearly support, and they're kind of on an island to the downside. And I expect this to clearly continue. But AMD was a great short. I mean, this morning, and we put this trade out in Discord this morning when it was popping up above VWAP. We took the short up here, and it came very close. I think it was 58.10 was where we were looking, was where my stop was set. So I had 58.10, and the reason I had 58.10 was yeah, and I could look at those. No problem. 58.10 was kind of the top of this range up in here. Came very close. I had just put the order out there, didn't grab it, and it just went right down. And this was another great almost 2 point trade on AMD. It was just a really good short, and the market was strong, was weak. AMD for some reason popping up, and we took that trade. So again, short-term trade only. Take what you can take. and then go on. My other shorts that were long-term shorts, I did cover some. If you're kind of wondering, I did cover some of my PayPal. I've been holding. I'm still holding PayPal short. But I covered down in the 80s. We started this one yesterday. I think it was like 86, 87. So nice 2-day trade in PayPal. Still sitting in it. We also, shorting the heck out of these freaking cannabis stocks. Moss continue its downward slide. We keep on making money on this one. I'm telling you what, this is great. We did cover some down at 10, but we're still sitting long-term short into these, PayPal, Moss, just, there's no reason for these to be up. So short the F out of them. And that's what we're doing. So, the trade keeps on beginning. I'll tell you what, a no starter for me, a couple no starters. We had a pretty good list, I thought, this morning. But American Airlines, and I don't know if you saw this, Todd, we actually had a company come out and pre-announce to the upside, increased margins, yeah. So you can see the pop-up right in here. And of course, Delta is reporting this week. So I thought, you know what? All right, maybe Delta's going to be bought, but the market didn't even, I don't know what I was thinking. I should have my traders in the my mentorees. You guys should have slapped me silly. You should have slapped me silly because it turned out to be a good short, but what do I know? And so that's something to think about, that they pre-announced to the upside, they still slapped it down. So I kind of putting that mental note in there. Go ahead. Yeah, typically you get follow through because they're announcing this week. So you get some institutions thinking, oh, because look, it's the airline. They're all the freaking same, right? I mean, they're basically like the railroads. I mean, they got sunk costs, and people either traveling or not traveling. There's not much price elasticity between the two. So you would expect some institutions, because of Delta reporting, that, hey, maybe there's an upward surprise, and I'm going to position myself into that stock.
That makes sense.
And so that's what I was looking for. And then, of course, you see the other ones pop up. Then I always go in the travel industry. I always go to old, reliable Airbnb. And look at this. I mean, I wasn't looking short, so I didn't take it short. But look at this drop off. So, I mean, it was like a freaking cliff dive. So, yeah, I mean, didn't work out. It was a couple things. Of course, Tyler's got to do it once in a while. I mean, he's got to mute himself at least once, man.
Once a show.
Once a show. He's got to do it. But anyhow, so that didn't work out. Another one that didn't work out for me was Roblox. Roblox got a downgrade and a $20 price target. And this thing just, it did come down, but it just, I don't know. This thing has not been a good trader to me. I just don't like the price action. You can see the cliff dive on all those others. Why am I short Roblox? It just wasn't, AMD had a nice little pop up, and we got a nice downdraft. Roblox is just bullshit. But I know New York Chris trades this one a lot. He's in love with this company. Kind of like Mark and Meta, right? No, I'm joking. But nice. If you caught this,
damn,
and
that was nice.
This was the trade.
That was the trade.
So great trade. Look at that pattern. You see this, man, hop the heck in there, and nice rounded, and boom, off it went. So nice trader in Roblox, but I was looking for the short go, and again, another one. Okay, so Rivian basically recalling almost half its freaking sales car fleets. And look at this one. This one, I will say, I almost took a long in this, but I just, the news is so damning to me, I just didn't want to do it. But this one was holding up strong, and I put this in Discord at the time. It was holding up so strong while the market was going down. And especially after a stock that had been beaten down and had some bad news 2 days ago, there's definitely something going on here. And so you kind of want to play that if you see that and kind of jump into it and stuff like that. And yeah, well, Mark, Mark yesterday, if you remember, had made his final, this is the bottom meta call, didn't he?
Yes, he did. He did.
He said, this is the final one I'm making. So, Mark, I expect you to go out and buy puts today.
Right.
I mean, look, they're having an investor today. But, I mean, now, I hate to say it, the reaction not too good right now for I mean, this was a great short today. I thought it was going to 24. That was my target. I called it in Discord this morning. But yeah, I mean, $1,500.
Dude, that actually looks pretty sick. Look it up.
Why don't you pull it up, Ty? Pull it up and share it for us.
Yeah, this actually looks pretty sick. I'm sharing it on. I'll show you, I guess, because you can't see my. But that.
No, share. There you go.
That actually looks pretty sick.
Nah, I mean, it looks pretty sick, but we're heading into like a recession, and it's $1,500.
And now look, I'm not right. I'm not saying it's a good purchase or a good timing, but I'm just saying it looks pretty freaking sick.
Yeah, look at that. Wow, $1,500, man. So anyhow, market not really appreciate. And I'll tell you what, I also saw at an investor day, there was a lot of Microsoft. It almost seemed like Microsoft was part of this investor day because there was a lot of news coming out that Microsoft products being supported with Meta and stuff like that. But you're not seeing a positive stock reaction out of it. Matter of fact, stock's not moving at all. Look, I think Meta is just a value trap, and just stay away, guys.
Yeah. And Borlam's right. I mean, the consumers we just saw are getting crushed. So it's pretty expensive with the consumers getting crushed right now and going into debt on their credit cards. So it's...
Yeah, I mean, it's just not a good call, not a good look, and it's basically just, going to fuel the institutions thinking that Zuckerberg has no idea what he's doing, introducing a $1,500 headset.
Right.
When the consumer's getting crushed. So I agree with you guys on that. So just be careful. And good point, Borderline. I mean, look, we have fun talking about, we have fun talking about, call them bottoms and stuff like that. But yeah, don't call bottoms. I mean, all you need to know, and I'm not even sharing my chart. I'm looking at my chart like I'm sharing it. All you need to know is this is not a good chart. That's all you need to know. You don't need to know anything else. Look at all the moving averages stacked. It's in an active sequence to the downside. Okay? And every time that Meta has tried to get above its 50 moving average, it got smacked. Try to get above the 50 moving average, it got smacked. Try to get above the 50 moving average, it's gotten smacked. Try to get above the 50 moving average, got smacked. Try to get above the 50 moving average, it's got smacked. And now it's in an active sequence to the downside where the 9, the 21 are now the lines of defense. And they're all perfect. This is like a textbook short, the way the moving averages are stacked.
Yep.
And you don't even have RSI below 30.
Right. Yeah, it's not even oversold. It's just kind of grinding down.
Yeah. It's fun to talk about it, but, we want to make sure that we're not trading it.
So basically, Borlam says he's not putting his money where his mouth is. Okay.
What do you mean?
No, he said, I'll call it top or bottom for bragging rights, but won't play with money. Like, all right, well, it's basically like you saying gold's sexy and you're not buying gold.
Well, I agree with him though, man. You don't want to trade off top bottoms because nobody's smart enough to do that.
Oh no,
now,
of course
I'm not talking about like trading off levels.
Right.
But I mean, I can tell you this: I'm not smart enough to know when Meta's going to bottom out.
Right.
But I thought 124 was definitely in line today. I thought we were going to get there, but no, it just was not to be. Right in this area, right in here. Is what I was looking for. But look at this chart. I mean,
dude, that's killer.
Yeah, this is tough. So don't get stuck in the value trap that is Meta. Anyhow, moving on. You had some other news. By the way, and this is why you gotta be careful in a bear market. The other day, last week, we were looking at Win and some of these stocks that were breaking above their 200. Look at this, these 2 days in Win. Has anybody else seen this stock?
I did not see that.
I mean, we were at 75, above the 200, maybe getting ready to go. 2 days later, we're at 58. Jesus.
Damn.
That's a bear.
What happened to that?
That's a bear market, man.
Holy shit, yo, that thing... Stuff.
Look at LVS. Look at MGM.
So I'm confused. So you have Airbnb, MGM, LVS, Win, like all the travel things, but you have American Airlines beating. Like, I'm just a little confused how this whole travel sector is working right now.
Well, in reality, I think a lot of these. I think what's going on in the gaming sector is, again, and we didn't really talk about this. This is, to me, what's going on in oil. Okay. Oil, to me, pulled back yesterday on the fact that China is locked down 36 cities again.
Right.
Okay.
Right.
And the COVID narrative. So I believe that this is all based off of China lockdown that, hit yesterday. And that's why you saw these big long bars down in all these.
Did they have a big exposure in China?
Well, some of them do, but even if they don't, it doesn't matter. If there's like this, well, some of them have a big exposure to Macau. Mm-hmm. And so, they typically will follow through,
right?
And follow through with China. But also just the fact that, investors get scared if there's another variant that's going to be, throwing through.
China's the only one that's playing cat and mouse with this virus. Everyone else is over it.
Look, and I know I sound like a conspiracy theorist, but I said it before. China's doing this stuff. This is the way they're supporting Russia because they're a communist nation, okay? Who cares if they're making money, right? They just print it and use it anyhow.
Oh, yeah.
Okay? So, OPEC, look at all the stories that came out today where it had desperation. The Biden administration called the Saudi prince or somebody in the administration called the Saudis and said, look, at least delay it for a couple of weeks. Mm-hmm. They basically spat in their face. So these are, Iran, same thing. These are the nations that are supporting Russia without supporting Russia.
Yeah.
That's what I firmly believe. But I mean, either way, it is what it is. And you got the crazy bug maybe getting ready to come back. And either way, you got people jumping ship on that. And that's what you saw. So crazy, ugly action. Pepsi, I was looking at Pepsi to see what's going to happen here, and Pepsi getting a nice little bounce because Pepsi's the first really major company to come out with earnings. I believe it's after the bell, or it could be before the bell tomorrow. I can't remember. Sorry about that. But you're getting a nice little 1.3% pop on Pepsi. Was up pretty much most of the day. You could have had a nice little dip buy trade. I was going to trade Pepsi, but I got so enamored with the market that I just I didn't put on the easy trade, and Pepsi would have been an easier trade, as you can see. Nice dip buy right out of the gate, going against what the market was doing, and it kind of helped push out. It's the second largest holding of the Staples group, and so you get a little pop out of that group based off of Pepsi. So nice action in there. This dice, baby. The dices were rolling, man. Here's where, and again, I got to point out, Bornholm and Mao, they're always talking about option activity, and there's a reason. This one for the last 2 days has had tremendous option activity to the call side. Tremendous amount of calls being bought. And this proved to be a good indicator of that because you got a nice little pop up here pre-market. Went all the way up to 50. And, just because of market conditions, risk off. Nice short from 50 all the way down below 40. So dice still up 65%. But, it was, I know New York Chris, one of our traders, was looking at it. Weber got a little pop-up today. And this is kind of a little bit that, I'm kind of don't know if it's just a weird market. So Weber got a nice little pop up on a rumor it may be taken over. Okay, so you can see the action right in here. Went up almost $1.50 on that rumor, has since fallen back down to the scene of the crime, which is what we always talk about. But, you typically, and we're not seeing a lot of deal making, but you're seeing some stocks, Joby and stuff like that, some stocks that are moving and popping based off of, rumored deals and stuff. And you typically don't see that in a tough market like this, in where we're going to be heading into recession and stuff like that. So it's something I definitely wanted to look at. I'm not sure if Mo's still in here. Mo wanted me to look at a couple stocks, and I'll take a look at them now. NE, the utility company, energy company. Ty, when we come back, look at this. What are you thinking about NE in here with what we're looking at?
Oh, NE.
Kind of no man's land, if you ask me.
You're exactly what I was about to say. Because I first like to look at it on the highlight. Because if I've never seen it, I like to see, all right, what's the monthly and weekly look like? And monthly and weekly, in my eyes, are just really in no man's land, like you said. And you can even see it on the daily. And it's just, I don't like to look at things right in the middle of their consolidated range. I mean, you have your obvious highs up here, and you have your lows down here, and we're in the middle. And so I'm not interested unless, I mean, really, ideally, you get a bounce back down to 70, and then we can talk. Then we'll see where we're at. But I mean, to be honest, I wouldn't trust buying it right in the middle here, because your stops, if you're looking for a clear stop, it's all the way down here. So, personally, I wouldn't. Yeah. I don't know.
I agree. Look, we have a saying, Mo, don't diddle in the middle.
Yeah, exactly.
So I'm not diddling anywhere in the middle on this one. I don't know. There's so much. There's a good chance. I don't know. See, look at the monthly chart.
That's what I was. Yeah, that's because you saw the last couple months reject the highs, big bearish engulfing, and now we're seeing it come down into this zone here. So I'd expect a little bit more of a continuation down. Then we can talk once it reaches the moving average, once it reaches this pivot point. So I think it has.
Yeah, because if we are going to recession and we are going to have more of a pull down, utilities typically do better.
Right.
Which NE is, has a big utility component of. Mo, I didn't see whether you would look. You wanted me to look at TNX. Look, I think firmly it's going to 4%. I don't like to look at the bond market and draw trend lines and stuff, because the bond market typically doesn't trade like that, right?
Mm-hmm.
And it's more fundamental based. And though it's the bond market doesn't move like this. I mean, It's just crazy. I think a lot of it, look, either way you want to look at it, I think 4%, over 4% is definitely in line for where we're going, personally. But, right now, kind of, nice little rejection candle if you look at this. But, I mean, for us to get dramatic result right now, you need it to kind of drop back down, back down to this area down here.
Mm-hmm.
I mean, right now it's elevated and it's poised to strike well above 4. But I think the Bank of England is going to have a lot to say in where the dollar goes and where rates goes. Obviously CPI. So right now, the way we're using it, Mo, is it's a great indicator, man. I mean, look, bonds were running this morning. So where did stocks go? Down.
Mm-hmm.
Bonds fell off. Where did stocks go? Up. Okay. It doesn't get much harder than that. And if we look at the three horsemen, same thing. The Dixie going up, stocks are going down. Dixie going down, stocks are going up.
Right.
Okay. It's literally, I am trading this, scalping this per the 2-minute chart. Okay. And 95% win ratio. Okay. The VIX going up, stocks going down. VIX going down, stocks going up. I mean, literally, we have taught our traders over the last 5 trading days. Actually, last couple, we've been looking at rates and the relationship to all this for actually last 6 months. But in reality, it's been an intraday 2-minute tool to be able to trade the markets. And in the pre-market, it did it to the T. I mean, guys, it do it until it works, man. This is what we call taking candy from the baby.
Yeah.
Okay.
And I agree. I think the main thing to watch right now is what the Bank of England's going to do. And Friday, like Mike said, Friday's the end. The supposedly the end of their bond buying. So if it ends and they don't extend it like some of them are calling for, then the rates continue higher and all is merry and joyful. But we'll see. Obviously, just keep an eye on what happens Friday.
Yeah, I mean, look, and don't forget, we have tomorrow at 2 o'clock, guys, FOMC minutes. The market's going to come to a grinding halt tomorrow. Mm-hmm. Going into that, we'll be on the show. We'll probably sit through that. And then the big daddy, I mean, let's face it, CPI is going to be Thursday morning. And, we're going to give you tomorrow our preview of CPI, and we have been right on with every single CPI report so far. So it's a little scary. I don't want to give any more predictions.
I know.
It's usually not that easy, but we'll give you our report on CPI tomorrow's show going into FOMC minutes to get you ready for Thursday morning. Yeah. Walmart, I like Walmart.
I do too.
Now it's you're in this zone here. I mean, look, this was an important area. I'd like to see it get back above 133. But Walmart's holding up better. If you remember, we had put on a nice short on Costco on this head and shoulders top here, which continues to pay off. I mean, our long-term swing shorts have done really well. But Walmart, I think, is another company that is poised. I mean, you're going into you got online. They're more online. They've managed their inventory a little bit better, and they're getting a nice little bar up here today, Ty. Yeah. So what's your viewpoints on Walmart? Still below the 200, still got a nice rejection area in there.
I actually really like Walmart where we're at. I think so. What I'm looking at is we have this nice bullish flag here. Really, I mean, you could call it a downward channel. In my opinion, it can't really extend more than what it is because you have this previous lower high here. And then we broke structure, and so now what we've been doing since we broke structure is we're creating higher lows and higher highs. And so what I'm thinking now is where we bottomed out is this break of structure point. And so where we're at now, in my opinion, has to be where we hold, and so we're in this bullish flag before we break out higher. And so if we give up 128, 129, then I think it's, this trend is just invalidated and we head back down. And so definitely keep an eye on it because this big bullish bar against this previous break of structure could be a sign that we're going to go higher. So,
yeah, I agree. And, if we look at the upper time frames, let's look at the monthly chart on Walmart. You can see, I mean, kind of, like you said, you can definitely see those higher highs in here. And if you look in here, you kind of get a little bit of a let me see if I can go to a little bit cleaner chart in here. Yeah, there you go.
That's
much
nice.
better. Yeah, so you can kind of see it's kind of wedging, kind of getting a little tight in here. Now, we just started this month, obviously, so it, yet to be determined. But kind of getting tight in here. So,
yeah, and I mentioned that 120 to 129 level. I'm actually glad you brought this up because that 129 level is going to be right around this monthly support level, these lows in here, this monthly support. And so, yeah, I mean, it's interesting. I mean, maybe we have some room to fill, I don't know. So we'll see.
Yeah. And it's pretty nice, if you kind of look in here, you're right. We've kind of had this defense at the 50 moving average on the weekly chart. So, and it's starting to creep up into this. So Walmart to me is getting ready to make a move.
Yeah.
Kroger was the other one that Mo had. And first, look at the monthly chart. And this is why I wanted to look at the monthly chart because I've traded Kroger a lot in the past. Look at this area.
Damn, dude.
That it bounced off of. So, nice area. I love this area. We should have bought this thing at 43. Look at that trend line in there. Everybody knows that I jump up and down when there's several areas in one spot of support. So I love Kroger right in here. Yeah, it is. I would say it is a little expensive, but it's a great technical chart. Yeah. I mean, if you look at the weekly chart, I mean, you can see nice bounce off the 100 here. If you go to the daily chart on Kroger, you can see this level. I'm going to take this off now. I don't need to see that. Getting nice bounce out of here. This had been in an active sequence to the downside. So I think, it still has some work to do, some base building. So I wouldn't be buying it now. It did break above the 21, but you got the 50 overhead, and you got this kind of secondary level that, I'd like to see it maybe kind of bounce up and then kind of maybe reject and make a higher low in here.
Yeah.
Maybe support itself right around 45.
Yeah, I like that.
Yeah. So yeah, I like Kroger going forward. The upper time frames look pretty good. It should hold up. But what I like about it is you got a clear line in the sand.
Yep.
43. I mean, and that's half the battle, as we always talk about it, half the battle. Kroger paying 2.35% and PE half of Walmart. So there you go. I mean, I would kind of think Kroger would have historically a lower PE than Walmart, but not bad. See, Mo, you got our fundamental guru Mal giving you his analysis, so that kind of works out. All right, well, let's finish this up here because I'm done, man. We went through all our trades, a lot of good, great trading today. The SPY, let's go back. Sorry about that, ugly. So the SPY, and actually let's go to the ES because I've been kind of comparing the levels on the ES and then to go back and forth. So looking in here, really couldn't kind of clearly breaking this uptrend that we had off the bottom. We're now below Friday's lows. We're below the 3640, which was June lows. I said, look, for further upside, we'd have to stay above this 3640. We're not really doing it. We're now below Friday's lows. So, the next line in the sand would be this pre-market high right here, which, happened to be close to where it closed.
Yeah, and that pre-market high that you have right there is also the 4-day point of control since Friday. Point of control since Friday. So that's going to be an interesting area as well to keep an eye on. Yeah, definitely. So, already starting to fall off a little bit. Like I said, don't trade this. There's no reason to chop yourself. We've had such a great trading day, such a great trading plan, and we don't want to chop up our profits. We want to go now sit in the sun, even though it's kind of cold out, man. Yeah, right.
Yeah. All right, guys. Well, look, safe trading. Good stuff. Mo, thanks for the questions. Mal, thanks. Bornalam, thanks for helping out. Mark, thanks, man. All you guys, appreciate you.
Yeah, thanks guys. It's been fun. Thanks for chatting. I'll see you tomorrow. Have a good rest of your day.